Hello, everybody. Some may consider these boring days, but they can actually be the good ones. We'll try to break that down today. We'll talk about how traditional markets are lighting crypto on fire. Literally, you may not notice it, but I'll show it to you today. Thank you all for coming. Hello, Piper. Hello, is that somebody in Iceland? Team D Tesla. Everybody else, let's go. And Team UK. Hello, Jonathan. Where's Sean D? Whenever he's not here, I worry about him. Anyway, hopefully he's okay. Let's jump into the story, my friends. Lots of good things happening. We're going to talk about all the usual on-chain stuff, try break it all down. We'll also tackle a controversial subject. Can AI actually hack crypto? A whole bunch of dominant stuff, the correlation between silver and crypto, and so much more. Let's get into it. Boring days and not financial advice, just a guy on the internet. And a big thank you as well to everybody on Patreon. This is from Cookie Jar. Sounds like Cookie Jar. Cookie Jar. I hope you don't mind that. I joined your Patreon about 4 years ago, but didn't follow through. I rejoined in early 2025, and since then I've been disciplined and doubled my investments. Nice work. Yeah, there is a Lindy effect when it comes to investing. Kind of if you jump in and out of markets or whatever, process, community, and play it year to year, it's not as good as over a longer term because cycles are everything. In fact, I've got a rule du jour coming out. Stay tuned for that. And it'll talk about the importance of building cycles into your planning for investing. Let's get into the ugly news first. Get to the heart of the matter. This is from Bitcoin Long and Documenting Bitcoin. Anthropic did a test if artificial intelligence could hack blockchain's smart contracts. And in simulation, this wasn't a real hack. The agents managed to steal 4.6 million. Using Opus 4.5 on ChatGPT 5, they stole 2.1 million. Obviously, the better the AI, it's funny, this is nearly a chart that shows you how good the AI is. The better the AI, the more money it can steal, which is a pretty dark thing to say, but the point is it can. And this test was done hacking ETH contracts, by the way, not Bitcoin. Bitcoin is safe. This was on ETH-based smart contracts. I want that to be very clear. What else do we have on this list? We have the weakest ones. DeepSeek was no good at hacking. Sonnet made 84K. O3, 96K. Opus 4.1, 833,000. And Opus 4, 965K. Huh. Again, the better the AI gets, the better the hack, the better the mode. And the point is, be ready. Lock up your security. AI is getting very sophisticated, and it's a double-edged sword. It can help you be more productive, but it can also help you lose everything. So just have your eyes wide open. And another ugly news, Meta sees everything from Doge designer. There was a Meta whistleblower says that WhatsApp private chats can be read by the company, despite promises of end-to-end encryption. And a lawsuit has been filed that Meta misled billions of users worldwide into believing their messages were private. And the usual thing is Facebook, Meta, Instagram from Doge designer says it cannot be trusted. I think we've known that for quite a while, so it's not exactly breaking news, but the lawsuit is happening. We'll see what happens next. Anyway, I always get relieved to leave the ugly news barrier and jump into the bad news, which isn't that bad. But fear and greed is at 29. Not too bad. Pretty much where it was last week. The ETFs still are not alive. Last week, we had a big dipper Rooney, about 1.73 billion out. That was also the largest outflow since, let's look at, that'd be week 45 or week 46. Circa mid-November. Again, people are worried. Everything's in a holding pattern. Everybody's worried about tariffs. Everybody's worried about rate cuts tomorrow. I don't think a rate cut is going to happen tomorrow. People are just waiting for stability in the markets. Markets hate uncertainty. And therefore, everything's kind of chopping sideways. That's why it's kind of the theme of the boring period, the boring time. Not the boring tunnel, the boring time. Flows by asset. Bitcoin lost $1.09 billion. Again, largest since mid-November. A little bit of inflows into short Bitcoin. That's not good. When short Bitcoin goes up, people are bearish, but it's tiny, so it's negligible. Don't worry about that. ETH dropped 2/3 of $1 billion. XRP, 20 million. Solana plus 17 million, bucked the trend along with Chainlink plus 3.8 million. All good down there. Now, so this is in the bad news category because the majority is outflow. Also, people have a theory, this is written by Zero Hedge, why Bitcoin is failing its role as a safe haven asset versus gold. Everybody's like, the bitterness and toxicity out there is like, it's like one of those things. It sits quietly for 20 years and loses money, and then it goes on the worst rip ever, and it takes everybody by surprise. And it makes everybody very upset because they're not on the golden train. I'm not on the gold train. Never was, never will be, the separate thing. And if you look over periods of time, yes, it's been a very good year for gold. But if you go back 20 years, no, you're better off being in other assets. And rotation is always very important. But from Zero Hedge, they had a theory that it's not a safe haven because people are constantly forced to dip into their Bitcoin savings. They use it like an ATM and they're forced to sell. Of course, the long-term holders are forced to sell because all of a sudden they have billions of dollars worth in one asset and maybe live in their mom's basement. It's time to take some off the table and get some lifestyle chips and buy that mansion or the yacht or whatever else. And that's just what happens. But this is one theory, which I thought was interesting. Another theory that's worth sharing too, which I found quite surprising. It is from GLI, Global Liquidity Indexes, and they decomposed the influences on Bitcoin price. Okay. First of all, risk appetite, 22%. That's clear. And we go back and look at the ETF flows. Investors have no risk appetite for Bitcoin right now, so that definitely has an impact. Then the other one is global liquidity, 40.7%. Yeah, a lot of people think it's more like 70 to 80%, but we'll leave it at that. By the way, Bitcoin's pumping as we speak. Woohoo, back above 89,000. That's good news. And the gold Bitcoin ratio, 11.1%. Interesting. That tells me that this looks at people who rotate, maybe between Bitcoin and gold. And then the gold price, 25.9%. When you add these two up, liquidity and gold impact nearly are the same at 40% each, and risk appetite, 20%. I thought that was very interesting, but we'll talk about rotations as well. A lot of chatter. All of a sudden, the world is chatting about rotations. Could there be rotation out of precious metals? Like we saw some massive volatility yesterday in silver. Could there be a rotation out of things like silver into things like Bitcoin? We'll see. A lot of people are hoping that's the case. But anyway, let's get back into more on-chain stuff. This is NUPL time. This is the net unrealized profit loss. And it is one of the classic on-chain metrics. And it shows you the amount of paper profit or loss relative to market cap. Now, it is a sentiment gauge for the entire network. People are happy when they're making money. People are sad when they're not, or when they're losing money, very sad. It's kind of like a happiness-sadness indicator. Think of it that way. And it shows how many times the price exceeds the average cost basis. And the NUPL is what share of the market cap is in profit. Now, good news about this, if we are in a true bear market, which is capitulation, NUPL goes negative, meaning the market is on average at a loss. We are nowhere near that, everybody. And the fact that NUPL equals about 0.36 at a price of 88,000 indicates maybe it's just a correction because the majority of people are still in profit relative to their purchase price. Again, this time is different. Everybody's calling it a bear market. Yeah, it's a bloody nasty correction from 125 down to 88 or whatever. It's bad. But is it a bear market? I don't know. Again, it goes back to simple stuff. Don't overthink it. It goes back to money flow. If more people are buying than selling, we're golden. That's it. Golden, excuse the pun. Now, back to AI and trading, which is near and dear to our hearts, and we're doing a lot of research into this space as we speak, by the way. Grok 4.2 is the only profitable model on prediction markets in the prediction era trading competition, and it is actively generating a profit. It made about, I think, 11 grand on $100,000. And interesting to note as well, there's a whole bunch of investing lessons you can actually pull out from this when you analyze how it trades and why it's winning. And sometimes overtrading is not good. But you can see number 2 is Claude, but they actually lost money. GBT lost a lot of money. DeepSeek lost money, etc. So Grok is the winner. There will come a day, maybe 1 to 2 years, where that's it. Short-term trading will all be done by AI. Humans will no longer have a hand in it. And if they do, they'll lose their hand. It'll be blown right off because these guys can think in fractions of a second. Where us humans, it takes a little bit longer. So be prepared. You know, you'll be less shocked when it does happen. Now, AltSeason, still nope. We're at, what is that, 33 or 37? Nowhere near where we need to be. But there are things changing in the underbelly of crypto. And that takes us to the good news, my friends. First of all, January, it's actually more than this because this was taken before the market just pumped. Let me just look at the chart, actually, because it is quite a rager, it looks like. Bitcoin shot up from... Oh, wow. Wow. This morning at 9 a.m., we were at 87K. Now we're at 89.3. It's $2,300, my friends. And since I started, no, I was only 3 hours into my coffee at that stage. Anyway, let's get on to what happened. This is all of a sudden out of date because the market just shot up to $2,300. But the point is, forget it. If you look at this, yeah, well, Bitcoin was down at 87K. Now it's 89.3. So it's down about 2 or 3% for the week. A lot of things, though, were doing well. Hype, dark green. Solana, 0, which means didn't make or lose anything. Binance, up. OKB, Zcash, up. Leo, up. Again, it wasn't... Well, the week has changed, and that's how fast things change. Now, enter Tom Lee. He believes... I forgot to include a Dixie chart. I shared it on Patreon last night, I think. But Tom Lee just said on CNBC that the weak dollar will send global risk assets much higher. And this, of course, is very bullish for Bitcoin. Obviously, the strength in things like silver and gold show you there is alarm bells going off in fiat land. When does that trickle through to risk assets? Typically, when the Dixie goes in the toilet, people with dollars look for risk, and that money goes into the risk system. Bitcoin, disruption assets, etc. So we have to wait and see. But also beware, Tom Lee did say we'd be 180,000 by the end of January, which is Saturday. So be careful, everybody. Bitcoin is going to be $180,000 by Saturday. Of course, it's not. I did promise I'd eat a shoe in December when you said that. And then when we moved out to January, I said I'd eat 2 shoes in January. But looks like I don't have to eat any shoes. So I'm happy about that. Always good to put a wager in play so you won't get caught out. Now, weekly ETF flows. You can't actually see the tiny little green bar, but yesterday was positive for the Bitcoin ETFs, but it doesn't really show up yet. So maybe the week is okay. But last week was nasty. That's the big red bar, which counteracted the green bar from the week before. Now, enter Plan B. Now, you hear people groan. It's like, oh, Plan B, oh, you promised us $1 million Bitcoin and stuff. Plan B is a stock to flow guy. And I actually have always believed in stock to flow. I think it makes sense. It's about the impact of scarcity on an asset. But he came out with this new chart and he said very clearly, first of all, because there's a lot of confusion out there on the Twitterverse, the 4-year cycle is not the same as a stock to flow model. The 4-year cycle says that year after the halving is a bull year like 2013, 2017, 2021, and 2025. But guess what? 2025 wasn't a bull year. So the pattern is broken, as we've been saying for a long time. But his point is stock to flow is nothing about bull or bear, top or bottom. It's a thesis that scarcity drives value, drives price. And the key part about this is, he said, stock to flow models a rough path of non-linear phase transitions towards $30 trillion plus market cap. Okay, you can do the math. That's basically $1.5 million per Bitcoin ballpark. But short term, he still believes, maintains, in the next, say, 2 years to go, he believes we get to the $250K to $1 million range if stock to flow works. Now, he also said another thing too. If you look at the current cycle average price is 90K, the previous cycle average price is 34K. So if you were just DCAing on a daily basis, over the previous cycle versus the current cycle. Previous cycle, you would have spent $34,000 on a Bitcoin over a year. This cycle would have cost you over $90,000. So it's, call it, tripled between cycles. Still okay, still a pretty good return, but nothing like the banana zones we're seeing for precious metals. Anyway, point is, stock flow does not mean 4-year cycle. Shout out to Plan B. Hope he's well. Let's look at some crypto compendium stuff. These are the returns. For the top is the last 7 days, and the bottom is the last 30 days. I always like to look at these in conjunction. This winner is Hype for the week. Hype smoked up actually 20% here. It's actually not 30% because it just shot up again some more. The losers for the week are ICP and Monero XMR, which is crazy because I did say last week Monero is going to mean revert. Remember that? I showed you the chart over the 3 spikes over the 9 years or whatever it was. It's going to mean revert, and it did just that. That's just so predictable with these charts. The winner over the month is Pepe. The loser is Uniswap and Zcash. And it was actually really interesting to watch the rotation out of Zcash into Monero and then out of Monero again. It's like Zcash is now going up as Monero goes down. You can't make this stuff up. That's why pair trading is very important. Anyway, let's look at ETH ETF flows. You can see the tiny bit of green so far for the week. Yesterday was green for ETH, but last week was red. Again, it was more red than the week before that too. So net, Ethereum ETFs have not made any money literally since, what is that week? That would have been, oh my God, going back to before the 10th of October. That was the last time ETH ETF flows were net positive. Okay. We all know what happened. 10-10. Crypto got a kick in the teeth. That was Black Swan. So it's reflected right here. People like certainty in markets, and this really rattled a lot of cages. But the good thing about humans is they're like goldfish. Over time, they will forget. 10-10 will be a distant memory, and they'll be back perping like degens once again, which, by the way, is already happening. We'll get to in a second. Sol ETF flows in the weekly, still positive. A record since the beginning of the Sol ETF time. How many weeks is that? 14 weeks. We are into ETF land every week. Positive. That's a good sign. Very good sign. Now, let's talk about the crazy stuff happening right now. This is the amount of volume on Hyperliquid. Number 1 asset is Bitcoin USDC, 2.3 billion in volume. Number 2 is silver USDC. You can now trade silver in Hyperliquid, 1.31 billion, which beats out ETH, 1.28 billion. It beats out Hype itself. Hype trading Hype on Hype, 443 million. Sol, $250 million. They are the top leaders for volume on Hype. What's interesting is a week ago, silver didn't exist. It's new and it's taking over, and the more volume, the more money Hype makes, which means the more buyback, which means the more the actual token goes up. Very simple. Don't overthink it. Let's talking about money too. These are the top money makers in crypto. The app revenue. Solana number 1, 6 million. Hyperliquid number 2, 1.92 million. Solana still does 3x Hyperliquid, but it's not bad. And Solana also coincidentally does 4x what Ethereum does at 1.51 million. But it's okay because Solana trades at a fraction of the market cap of Ethereum. And again, the markets can remain irrational longer than probably I can make YouTube videos. Think about that. Nice way of thinking. Binance number 4, 790K. Base, 732K. Remember, there is no base token. It's owned by Coinbase. It's a nicely centralized layer 2. And Polygon, 200 grand. Boom. That's it. Now, another cool view of the world, which we have now, which gives you an interesting perspective. And I'm going to turn this table into percentages of supply, because over a day, over a week, you can see exactly how much is being sucked away by ETFs. So if you look at the actual Bitcoin holdings across all the ETFs, they hold 1.3 million Bitcoin, but over the last 7 days, they dumped 18,000, which is nothing. It's a spit in the bucket. So when ETFs are red, remember, they hold 1.3 million Bitcoin, a big, big bag. The ETH holdings are 6.028 million ETH. Again, a big bag. I think Tom Lee wants to get to 5 million ETH, which means he'll have more than BlackRock. And the 7-day outflow is 189,000 ETH, which is a bigger chunk, might more or less be on par. And then the Sol ETFs, they now own 8.7 million Sol, and they added 87,500 last week. So it gives you an interesting perspective of exactly what happens, because as promised for 5 years now, one day we'll get a supply crunch. I don't know when, and I don't know for what asset. But maybe if everybody buys up all the ETH, the price will go to the moon. We shall see. Same thing with Bitcoin. Bitcoin is a true scarce asset. And may I remind you, if you need more gold, you need more silver, you just need to dig a little bit deeper and you get it. You can't do that with Bitcoin. Never could, never will. Now, back to fiat, because that drives all our boats upwards or downwards. Apparently, the Fed is preparing for a yen intervention. This is huge. Touched on it very briefly yesterday, but this is where the US sells dollars and buys yen to stop Japan cratering. This means liquidity goes up, risk assets go up. The more fiat floating around the system, the more assets go up, including your real estate and your Bitcoin and everything else. But remember, a strengthening yen first could cause a crash. But we'll see. It's like when everybody talks about a potential crash happening with the yen, which we've seen as clear as day for the carry trade unwind for the last year, it's probably not going to happen. So when all the sheep think that something's going to happen, it never happens. So just bear that in mind. This may be wrong. But anyway, there could definitely be a few cracks in the system occurring. And also, back to hype. We saw the money they are making, but why are they surging so much? Hyperliquid. And shout out to Mando. Mando yesterday called this out. He said, I like Hyperliquid. At the time it was $22. $22. Let's check on the price now, actually, because that could be interesting. And boom. Gotta go to my DGen. It's up 20% today. It's at $30 now. So it went up $8, 22 to 30 since DCA yesterday morning. Good job, Mando. Anyway, why? Why is hype on fire? Well, silver is booming. And remember, people aren't just trading Bitcoin and Sol and ETH anymore in Hyperliquid. $1.25 billion went into silver trading on this platform over the last 24 hours. And for one stage in 24 hours, it was the most popular thing to trade. And remember, hype make a lot of fees, and they make a lot more fees when there's a lot more volume, especially for things like silver. And some guy, some whale, YOLO'd into silver and hype with a $36 million short with 25x leverage. Shout out to Crypto Rover, who's tracking this trader. Their liquidation price was $125. $125. And silver rebounded today. It took it a bit in the shorts yesterday. I think it fell down to 104, 106. Now it's back up around 112, up another 6 or 8% very quickly. And they got nervous. I think, I don't know how much they lost from this. We don't know yet. We don't know yet how much they lost, but we do in a second. Because they got really nervous a day later and closed their position. And they lost $4.5 million, which, by the way, considering it was a $36 million bet, that's okay as a stop loss. If you could put $36 million on the table, you lose $4. You're very clever to get out quickly when the trade turns against you. You don't want to be holding the bag because he was going to zero in another $10. So, and after the phenomenal banana rise it had, that could easily happen. Now, this is hype. It's popping. It's interesting. It was actually at the very bottom of the range, down to level 2. Clear buy signal there, and 2 massive green candles. One yesterday, kicked in yesterday afternoon, and the other one today. This one is bouncing back, and who knows? We could see hype once again get back up to the 60s, but it would have been a nice little scalp yesterday around $20. A little perp action, all the usual good stuff. Let's get into stocks real quick. Not a lot happening in the stock news, not a lot happening with AI. It's kind of a quiet period before big earnings come out, but stock fear and greed is at 55, which is neutral, which is very strong. And the market over the last week recovered. Last week, they got hammered. This week, technology's all up. NVIDIA up 4%, Google up 4%, Microsoft 6%, Apple 3%, Broadcom down 3%, Meta 10%, Amazon 4%. What's with 4% this week? Tesla up only 1%. And all the rest of the stuff, Micron 13.5%. absolutely insane. AMD 11%. The AI semis and AI memory is on fire. Like we're seeing crazy moves in certain assets. Let's talk a little bit about Tesla because they do have an earnings call tomorrow, and tomorrow I'll be on the live earnings call. Big long stream, but it's fun where myself and Herbert and Jeff Lutz and Søren Basher and all the team get together. But Robotaxi fleet did 4x in the last 2 months, give or take a few days. Now there's literally 10% of the Waymos on the planet are now running around in Robotaxi format. Waymo allegedly have 2,500. It's actually less than that, but they do have 2,500 vehicles in some places, but not all are on the road at the same time. And now Tesla has 10% of that, 240. What is key, though, is the pace at which it's changing and growing, which is phenomenal. The fleet went up by 50% in 3 days in Austin last week, which is a stunning statistic. But what's also another thing that I track is safety, is how many miles do these robotaxis, which are autonomous, run around on the roads before something happens. Remember, cars are dangerous, humans are dangerous, roads are dangerous. Robotaxis, given mathematical odds, they're going to hit something eventually. But right now, Tesla Robotaxi is on a 380,880 mile win streak. Now, comparing this, I hear you ask, what are humans? Well, a human crashes badly once every 30 years. Sometimes humans crash once a year. But this 300,000 miles per human is a bad crash where insurance is involved, where police typically are involved, big damage, maybe multiple cars, etc. But a lot of people literally drive into walls, crash into things in parking structures, drive off a ditch, and they don't claim that stuff, so you never hear about it. But it happens all the time. I've seen people do it all the time. Parking lots are the most dangerous places on earth. So if you've got kids learning to drive, tell them never go to a parking lot. And if they do, go to some weird faraway edge of it. But this is huge. If you consider a human does 10,000 miles a year, that's every 30 years, 300,000 miles for a serious accident. So be safe out there. And if you imagine human years for Tesla's miles now, that's 38 years of driving without a crash, which you could argue is better than humans. Now, Tesla is also doing something very different. For the first time ever, they are piloting with a gas station, petrol station called Pilot. And they're putting superchargers in gas stations, which is cool. And this is where they are all over North America, which is interesting. I don't know if I think pilots are bigger in Los Angeles than up here. And for comparison, these are all the superchargers in North America. They are everywhere. We're talking, I think, globally, 80, 90,000 stations. It's crazy. But the big thing that's really interesting is the amount of power that they distribute to cars. And I took the time to equate that to what it means. Because when you hear, oh, Tesla, they generated or they distributed, what is it? I forget the number. I think it's 6.8 terawatt hours of power. I forgot to add it to the slide, my bad. 6.8 terawatt hours of power in 2025. That's enough to power 1 million homes for a year. That's enough to drive 23 billion miles. That's twice the power that the Hoover Dam generates in a year. That's 10%. This is an interesting one. 10% of all the energy globally that Bitcoin consumes in a year. That gives you an idea. You remember back in the day, we used to hear about government officials who want to shut down Bitcoin because it's boiling the ocean. Well, try AI on for size. That's going to be way worse. But 10% of Bitcoin energy, it gives you an idea of how much energy it is. And at least 100 million charges for cars. So cars charged 100 million times on Tesla superchargers around the world. Some, most people charge at home, but some people, if they're going on a road trip, they need the supercharger. So that's huge news. And the final thing is, this is in the wrong place, but I'm bringing it back to Bitcoin to wrap up. Don't be fooled by the Bitcoin boring days. This is Bitwise, which shows you, don't be discouraged. The price typically sits down at this level. This is an interesting chart. This is the Bitcoin gold chart versus global liquidity. We have never been at this level since 2015. Now, what typically happens is we never stay down here for long. Don't get bored or discouraged. This is what markets do to you. They get you, create a very tedious sense in your mind. But again, in previous cycles like 2017 and 2021, we were down here, sometimes long periods of boring sideways movement right before the price popped and tripled in a very short period of time. This is all about patience. The biggest price gains of any cycle typically happen after the boring periods. So get ready. I don't see this Bitwise chart going lower. Okay, there's too much liquidity. There's too much money floating around. Gold is too expensive. And I get excited looking at the gold price because I know one day Bitcoin will follow. And if you look at the market cap of gold, translate that to Bitcoin, and for years, myself included, a lot of experts said one day Bitcoin will reach the market cap of gold. If that happened today, Bitcoin would be at $1.7 million a Bitcoin, my friends. And that's all she wrote. Finishing with a fun meme of the day, just to be very fitting of the sideways boring action. We've been bouncing between 85,000 and 90,000 in the Austin Powers movie, where he's going back and forth in a tunnel, doesn't go anywhere. That's exactly what Bitcoin's doing, but that's exactly what it's designed to do, shake you out. I still have faith. I hope you all too. Let me know in the comment below. All these videos are turned into Substacks and podcasts, so you can listen to them again or get all the slides, get all the write-up, because I go very fast and a lot of stuff to make your brain expand. Hopefully, learn new things every minute. And a big thank you as well. A girl from Poland. That's awesome. I love seeing people from all over the world. Shout out to Sean D, T&D, K8, Anjo, Andy Panda, DBF430, Piper, AZ Rolfer, and a bottle of red. Thank you all for coming. Hope you enjoyed Octa. For some people, Tuesday is their favorite day of the week. I enjoy it too. I love doing the little tour around the world to see what's going on with On-Chain. Have a good night. See you all tomorrow. And hopefully for the Tesla fans, Tesla earnings call. We go live at 12:30 Pacific, which is basically 23 hours from now. Thank you all. Bye-bye.